Hi everyone. One of the best tax saving strategies that we come across and we love is the health savings account contributions. The reason why we like the HSA is the three levels of tax benefits it provides. It provides you with the tax liability reduction in the current year if you make that contribution. Any interest, dividends, and capital gains grow tax free. And then the third one is any qualified medical expenses that are paid for out of the HSA are not taxed at all. So those are the three tiers. Now, for those that visit the doctor regularly and meet the higher deductible, it may not make sense to go into the higher deductible health plan just to be able to contribute to the HSA. You want to be cautious and analyze basically the numbers and your medical situation as well. But I wanted to provide a simple calculation, and that's what we'll do. So we have the 2025 tax brackets and federal income tax rates. We're modeling a married filing jointly couple that has a taxable income of around $115,000. So here we have our ordinary tax rates, we have our tax brackets, and then we have the taxable income that falls within those tax brackets. So the 23,850 less 0 is 23,850, 96,950 less 23,850 is 73,100. Then we have our tax liability. So the tax liability is the 23,850 multiplied by the 10%, and so on. So that goes all the way down here. For this example, the taxable income for this couple is $115,000. They have a tax liability of $15,128. With the health savings account contribution, the family max for 2025 is $8,550. So before the contribution to an HSA, their taxable income was at $115,000. They made $8,550 contribution in December. That lowers their taxable income to $106,450. Now, how we get to our tax savings is this $8,550 falls within these tax brackets. So we can say that the 22% multiplied by the $8,550 gives you the $1,881 in tax savings. Essentially, we've lowered our tax liability by $1,881. Now, this is also beneficial because the contribution of the $8,550 also gets to grow tax-free. So no tax on the interest or dividends or capital gains. You have an increase to your net worth, and then you have future compounding of the $8,550. And this is just one example of why we believe the health savings account is a great tool for tax savings and growing your wealth. Thank you.